Jim, on Mad Money yesterday, you compared Union Pacific and Norfolk Southern. What about the other railroads? If you had to pick the best in breed?
It's Union Pacific. I picked Union Pacific. Look, that was a tweet. I'm doing all week on Mad Money. I'm looking at tweets, doing request hour, and this was a tweet that I got. We have the Twicker running underneath.
Twicker?
And we see the tweets as we do it, and adding a lot of Twitter's tweet people who are reading this. And what I would say is that CSX is probably the worst, so to speak, and it's a relative term, because they have a lot of coal, and it's thermal coal, and that's really not a great coal. Norfolk Southern has a lot of thermal coal. It's not doing that well. When I look at the rail that Buffett bought, Burlington Northern, that could be doing slightly better. They've got a good mix, but Union Pacific has the metric you need to follow when you talk about rails is repricing. Okay, contracts that were let at very low levels when things were more competitive that now have to be redone, and Union Pacific has the most repricing, and that plus coal means the most. Now, if you talk to any railroad person, what they're going to say to you is that our core non-able to be transferred to truck product that we ship is coal. They don't ship coal by truck. You can't ship it by pipeline. I mentioned that because oil can be shipped by rail. And what you see is that with natural gas at $2.50, you're going to get not an evolution, but a revolution. You're going to see utility after utility switch. First Energy this morning announces that 3 coal plants that were very much alive in West Virginia are going to be closed. They're going to switch to natural gas. I mean, that is a classic instance where Norfolk Southern or a CSX might have brought coal to them. And First Energy has historically been not the cleanest of utilities. That's historic. And when you see nat gas at these prices, it's just really horrible for the rails, but it's less horrible for Union Pacific than the others.
So should you buy them at all? I mean, we've seen the stocks
I said that they all should go lower and you buy.
Right.
We've talked in another video about the idea that we could get a sell-off of Greece. I mean, look, we have a huge number of bulls. We have people like Nouriel Rubini going positive. He could switch on a dime. That's what he does. Hey, he flip-flops. That's okay. And look, no ill will. But I will say that you want stocks that you should be ready to buy, and Union Pacific's one of them.
And what about another sort of a transportation like the trucking cycle?
These
stocks have run so big.
Celadon, I don't like Mexico as much as others. These stocks have been on fire.
Right.
FedEx, United Parcel. Someone downgraded FedEx the other day. I question whether you can get back into FedEx if my multiple expansion and earnings expansion story is right, meaning that I see earnings going higher and people paying more for those earnings. It's very hard to get back in. I mean, you have to hope that there'll be like a big market sell-off, and then you can upgrade FedEx. You need an exogenous event like Israel-Iran. You need an exogenous event like a Greece collapse. And then you get your chance to buy. Those people who are downgrading stocks here, they need exogenous events to occur, and it could happen. I'm not immune to thinking that way. I'm just saying that we have a lot of bull market characteristics here, which include paying up for higher earnings.
All right,
both
thanks.
Multiple expansion and earnings. If it was just pure multiple expansion and the earnings weren't going up, that's a short market. I short that kind of market. We don't have that kind of market.
So you can pay up for it. Okay.
Yes.
Thanks, Jim. I appreciate it.
Yeah.